we can take it away, Crypto Career. So we've got our first session
Crier.
here, Crypto Crier. I say career, the
Very
cracking
good.
backs, man.
That's right.
So,
Three C's. Crypto crier and chiropractic. That's right.
yep, gonna get going here with our first session, and nice to see you, Chris Coffee and Ken, up in the joint.
Oh, got some OGs in here. What's up,
Yep.
gentlemen?
So just gonna kind of do a overview of what we're gonna be going over here charting. Whether you can use this for crypto, you can use it for stocks, basically um, anything that you can chart, NFTs. So all the above you can kind of use and correlate with each other as just like common knowledge. Career, go
Sure.
go ahead and take it away.
For sure. Maybe not so much on the NFTs, I would say, but maybe definitely on the stocks and crypto side. There's enough volume, there's enough pieces to move around. So, but yeah, so this is pretty much a blank screen. Um, I'll kind of show you what I talk about. I'll add this one as well later on. We'll have this off for right now. And screw this down. All right. So I like to start off anytime that you're looking at charts. TradingView is a great resource. You can get pretty much free. You don't have to do the paid one. A lot of indicators. I think it lets you up to use up to three, I believe, in a single pane without having to pay, which is good because I actually personally set up all of my indicators so that people can use the free one and still get the indicators. Right. So what we're looking at here is just the overall structure of charts. Okay, we see a lot of ups and downs. Most of this stuff is based on psychology of, you know, is it FOMO? Is it death? Is it dead? What are we looking for in the charts that can kind of see might what happen again in the future, right? So these are some things I look for. Most traders are looking over here, like, oh man, he's doing all this right here in the 500, 1500 range over and over. But I like to look a lot farther back when you're looking up and setting up a trade, and I'll kind of just show you my overall view of why and what I look for in a chart. Okay, so I'll just go over a couple basic stuff too. Um, Here is your I like to use log function as well. Gets a little bit more smoother, especially for crypto with the insane amount of ups and downs, right? So starting off here, this is your height adjuster. Pretty much, you're gonna go by price, it's the y-axis of your chart. You're gonna be able to kind of narrow them down, expand them out if you want to see something larger. So I usually like to keep it, everything in view. I like to start on the daily. There's a lot of different time frames people can use. If you are not using the paid version, you can't have the custom time frames, but you can do like 15 minutes. You can do 1 to 2 minutes, I believe. Definitely the 4, the 12, and the day and the weekly, right? So there's a lot of benefits to using all of them. It depends on what kind of trader you're looking, what you're trying to do, right? There's a lot of nuances to kind of trading analysis in general. So when you are the best way to do it and the best kind of like means of participating in this thing is trial and error. So when I learned this stuff, I learned it for a stockbroker who had been pretty much full-time stockbroker for 16, 17 years for just his private money. He just didn't do anything for a firm or anything like that. He just traded for himself. And that's where I kind of picked up these skills. And I trade completely different than him. So he's a short and pullback trader, and I'm more of um, I like to do more longs, and unless they're like pretty obvious on the shorts. But so it's pretty much up to the individual person to find and try a bunch of different things. There's a lot of really cool things you can do. On here also you can do trading panel. You can go to paper trading here, and you can connect. So you can actually trade $100,000 for free. Um, it's not real money, and you can actually try to use these strategies. You can see I was showing this previously, which is somebody in this range here, so at that short range. So,
Yeah,
um,
career.
you
I'll
know, re-
I'll
yeah,
ask a few questions here for you because Some people might not even have some of the knowledge that
Yeah,
you
go for
were
it.
explaining there. So, one of the things you'd said was go long or go short. Do you
Yeah,
want
for sure.
to expand a little bit on what you meant by those terms there?
Yep. Yeah, so just in general, what you're looking for here is a the prices of a specific commodity or specific item have obviously they go up and they go down, right? So if you are looking at what they call perpetual trading, which is kind of like futures or anything like puts and calls in the stock market, these things are referring to when an item goes up. If I bought here and I'm looking for it to go all the way up here, I'm in a long position. I think that this current price is low. I think I will buy here and I will ride this wave up and along. If I think this is a top, and then I will go short. So then my position, I'll make money as I am going down in price. If that makes sense.
Yep, yep.
Good. Cool. Yeah. So again, there's a lot of different little nuances and structures here, but when I start out with a blank canvas, I had just deleted all my drawings here that I usually keep up active. I like to go and use a lot of horizontal lines. You go in here, and right off the bat, you see this is a really good structural low. We hit it a couple times, one, two, three. It was a lot of positioning. We get some volume in here on this drop too, and you can see that it was a previous drop and kind of like a position here in January of 21. And then if you scroll out really far, you kind of see that this is almost like the previous uh, cycle, 2017, 2018 cycle, bottom and top here. So again, we can kind of start drawing these things um, by how pivotal or how many times they get hit in the past, right? So if we look here, this is the absolute height, right? So we can already see that we're in this range from the kind of like the dead cat bounce, which is when something goes all the way down and then they everyone thinks it's gonna survive, come back. They call it dead cat bounce with this little like really low volume. But you see that this is the first little one that happened, kind of knee jerk reaction, get some volume back up. So we've been trading in this range pretty much since June. Like we hit this low. We've all the volume is in this little area. So you kind of look back, you see in the chart where there's pivotal moments, and where these kind of places lie. Again, like if I go through here, you kind of see how this one gets hit a bunch of times, 1700s.
And when you say
That's
gets hit, are you saying like what
Yeah, the price
this
hits these lines
this
repetitively
yeah,
over and
this
over.
it keeps hitting this spot, and this spot would be considered either support or resistance.
It's just like, yeah, not really a support resistance, just it's like a pivotal price action point, meaning that it could have been a previous support, it could have been a previous resistance, it could have been either. But I just kind of like to draw a lot of lines and kind of see what kind of I like to delegate them into ranges, right? So we kind of see here. This one was another one that got hit quite a few times here. This is another one. We get the top. We get a couple through here. This was a for the breakout here, and then we get the absolute pico top up here. Okay. So what I'm looking at on these things is which range are we currently in? What kind of price action do we expect going forward? And I like to use a tool that we've talked about called fixed range. I'll kind of explain it. Fixed range volume profile. It's one of these ones for trading view that you can use. What it does is this is the volume. This is how much people purchased per day. And you can see that we had like a huge spike in November when this little that was the FTX crash. That's a
Yep, a
good
lot of
day
people
to
selling.
a lot of people selling. You only get a couple of these. This is, May. This was the first. This was the true crash. Me, I believe personally, was that May crash was actually the true one. All of this was due to like leveraging positions with FTX and a lot of people like rebuying. you can see how, how much volume we had through like this whole area. And then after this date, which was May, we our volume gets cut pretty much in half, throughout this whole time. So this is a lot of almost like fake volume. We kind of get a double top. These are kind of terms that you kind of hear a lot too, double tops. The more times that you go up and hit something, or it bounces off the resistance of previous stuff, the weaker that price action becomes. And what I'll show you here is, like I said, with the volume, we have all of this volume in here. This is by day, right? So when you switch to the fixed range volume profile, it does it by price. So you'll see what I'm saying here. So we're going to start from that little breakout in June or January, sorry, of 21 through now. And we'll see that this is the price by volume. So instead of by day, how much volume per day, it's how much volume is at each price point. Okay.
Yeah, a
So
lot of people
what
want to
we
buy low there, huh?
Yeah, so obviously, the lower the price, the more volume that is coming in. So again, this is almost pretty much 2 full years of volume data, right? So a little bit over 2 years. And what we got going here is these in the thousands range is super low, not a lot of volume. This next one is 1090 through 1100, not very much volume. And then you see from 1190 to 1260, 1270 is where all the largest amount of volume has occurred. So to me, this is kind of like the new baseline. We've had 2 years of volume of purchases. The most purchased price is 1225. And that's a good sign, or you see that when people start getting below these prices, you don't get, first of all, you don't get a lot of chance, right? You had about June through July, maybe like a full month to actually get prices below that $1,200 range. And as we get, going forward, I'll kind of show you some more of these indicators that I use that I created with the stockbroker I was mentioning in the beginning, that are kind of tailored specifically to this type of stuff and this my style of trade. Okay, so on the basic, this is how would start. Anytime I look at any chart, I don't care what you told me what it was. We can even start with like a fresh chart, something I haven't even looked at in a super long time. Let's look at Tezos. I haven't even looked at this in forever. So daily chart, we see some volume. Let's look at previous points we got. And again, this is something that you're looking back, and this is this type of stuff you want to look at. So this was the range low, 35 cents. We got this point, looks like a previous good resistance point. We got a lot of volume. I would say this area hits a bunch of times. This is definitely a one right here. It's a previous support and resistance. And see, this one gets hit a bunch. And then like the Pico tops. All right. So you're splitting it into these ranges. Anytime that you see, this it hit, if you had charted this, we could have been in here in October and seen that it's downward trending. Previous, resistance, previous support was here. Now we're touching these things. This is, you can see how it kind of, I didn't even look at these things. I didn't draw this line off of previous, price action right now. I drew it off price action back here in August of 2019. So you can see how these things become kind of like a pivot. They definitely become important, and they can show up a lot in price action and movement. A lot of times people are like, doesn't make a lot of sense why these things matter. TA doesn't really matter, but you can get a little bit of competitive edge off somebody. I would say, you know, if you have a 50-50 chance of buy now or sell now, right? That's kind of what it always is on these price action things. And if you want to get a little bit of advantage over somebody, because this is a zero sum game, you have to find tools that kind of showcase, give you a little competitive edge on people. So again, I haven't looked at this chart in, I don't even know, probably a year or more, but you can kind of see what we're talking about. Let's do from similar January 2020. It's kind of like that breakout, this first dive. This I kind of start a lot of charts from me personally now is from the start of like the bull run or the which I consider to be the March 20th, like the big fall and the crash of the stock market and the crypto markets. So you can kind of see that we're in territory where no one is buying any of this volume. The highest traded point is $2.96. Anything below this is something where I would say is, uh, we a lot of these altcoins you're gonna see a lot. Pretty much every altcoin I do is gonna be look like this. You're gonna have a lot of people underwater, and when you see, even if you go all the way back, like to the start of this chart, let's see, you're gonna get the most traded price is still extremely high. So to me, this is stuff I like to see where even if people are still holding these things, most likely their price purchase is going to be around $2.80. So when we start seeing bull markets come back, these are the stuff to look at. Like you can get a $1.05 to $1.90 play if we start seeing some volume on Tezos. And like when I see these things, most people aren't gonna even try to sell if they're still here in these price points. They're not gonna sell under these prices that they paid. $2.80, $2.90. So these are like magnets when they're very below their current price. If that makes sense. But I'm gonna go back to this chart and see.
Prior, could
Yeah,
we look at stacks? Could you give us a little bit of a
sure,
take on STX token with the same kind of thing?
sure.
Oh, Trevor wants to hear some bad news.
I want the alpha.
Uh,
It's going to zero.
no, I'm on video. It's going to zero, bros. Let's see. All right. So daily charts looks better than the other one to me.
There we go.
All right, right off the bat, that's resistance. That's pretty strong right there. I wouldn't. This is probably another one. This is early to there's like not very much volume in here. I would say like this is where you start actually seeing a little bit of volume. That July of 2020. When does this start? This is pretty much like the first when it started, right? October
February, like February
19th.
2021. So,
Wait, what?
yeah, well, it launched January 2021, but it was available on Binance before launch.
Okay, I got you. All right, so this was all speculative trading, right? So this is until 2021. You weren't getting so January 2021 is when the chain actually started up. We actually, I would say these are points where you want to say this was all price speculation until like about here, right? So this is when it actually launched and use case, right? So when I see these things, this got hit a bunch, one, two, three, four, 5 times in the matter of like a couple months. That's a really strong resistance. So let's look at here. This is probably my next one right here. Say this little retrace back to here. This is a good one. This is a good one. We also notice here we got like a little bit of a tighter window on these, and the top is like real funky. You see that a lot when it's not a lot of volume on things. And like this to me, I would say is like manipulated looking. Like you don't actually see that like blow off top and that structure that everyone sees on that which stage of the cycle we're in graph. I would say that's the one that you this most likely is either manipulated or not very much traded um, comparatively to some of the other stuff that I look at personally. So these are the things I'll be looking at
I think
in terms of.
a lot of those
Yep,
tops were kind of like there were like some brief like news that would throw it over like $3, for example.
gotcha.
but it would kind of rest it around like the 2.2. I noticed that the y-axis here is like logarithmic because
Yeah.
the distance
I
between like
I mean, I don't know if you were here at the beginning. I always use logarithmic stuff personally.
interesting.
Just gives you a cleaner, like cleaner lines to me. I think this looks a lot more. Just looks a lot more jumbled, especially on like price action. Like if you look at like if you're trying to do ETH from 2017, the chart is like off the screen, and then you have
Yep,
your $80 one. So logarithmic is this one's not too bad because it's not like crazy multiples realistically. But like yeah, like this just looks a little bit cleaner to me. I've got used to using logarithmic. So yeah, that's what I recommended. But again, so we come in here, we kind of we look at this. The guess what the price of trade is. This is the average price that everyone's trading at. So everyone that is expecting or the average person has purchased Stacks has purchased around this price point. This is the most volume. This is the most purchases. So when I saw something like the other one, we saw the what was it, Tezos? We saw that the price was, you know, up at like $2 or whatever it was. I don't remember what it was. It like two something? Um, yeah, so we had like a $2.81. This was like the average purchase price here. So we got a lot of people that are underwater. If they're still here, like this one is going to be a lot more, I would say a lot more likely to reach these levels when we start seeing some bullish sentiment coming back versus Stacks, which is, you know, if people are coming into this ecosystem or already in this ecosystem, they've already purchased and people are accumulating at these prices here. So I would say if they get to like the 40 cents, you're probably going to see a lot more sell-offs because guess what? Most people are in profit versus XT Tezos, which is opposite, where most people are underwater still. Um,
got it. But would there be some impact on like retention or people leaving from being underwater, or
Not really, not on this like specific indicator. Uh, just to how I'm just trying to say like what I glean from this use of this indicator is that the average price purchased is this price. If it goes higher from here, then you're gonna see probably more sell action for me. That makes
got
sense.
it?
Just
Interesting.
from this indicator, just
There
like on
could
that one.
there could be a reverse impact from
Yeah.
poor
Like the
performance.
farther you get away from this and you're still like we're still I would me personally, we're still in a bearish sentiment market. The further that you get away from this line, the more likely there will be sales because people are in profit. Whereas this one, I could see something more like if we are in a bearish market, I could see something hitting upwards, into what was this? Tezos here. Yeah, so Tezos, I mean, yeah, this could be hitting this one easily because most people are here and they aren't going to sell it for what they less than they paid. Like if you bought a car here and then you kind of like it, you don't want to get rid of it, you're not going to sell for this value, right? Now let's say you bought a car and then your car went from here to, up 30%. You don't really, it's I think it's much more of a likelihood that someone would sell at that level versus someone who would sell underwater. It's just my thought process.
Can I argue with you for a sec?
Yeah, for sure. Go.
I would say, what about the effect of like, because when people are making money versus like recovering their losses, like when people make money, they tend to have like a euphoria about it. Like
Yeah, yeah,
Bored Apes, for example, they
for
start
sure.
to spread the word. They brag to their friends, you know, hey Crier, dude, guess how much money I made on stacks. You know what I'm
Yeah,
saying? Like,
100%. Yeah, brag it to people, then it starts ripping. I would say that's going to be more likelihood if when we get back to like a bearish, or I mean, I'm sorry, a bullish market sentiment when we actually get euphoria. Like, say my thing is like in the next, by April we rip up to 40 cents. If we're still having like macro economic stuff, people are still hurting. I would say it's going to be a lot there's going to be people that are obviously going to be like, oh yeah, now we're ripping and stuff like that. But until we start seeing, I wouldn't see that. I would probably not see that until we get above like $1, like the 76 to $1 range, is what I would say is what you're looking at, what you're talking about, like the
So there,
euphoric and
yeah, so there could be like kind of two stages here. Like there's like a
yeah,
rise with the sell off, then there's like if you
yeah.
can get to that euphoric
What?
level, it can break away fat. Like it'd be
Yeah,
easier for stacks to reach that euphoric level than say Tezos in this example.
exactly. Yeah, just in this example of why I use this specific uh indicator. So like if it was me and I was looking at this chart, I would say like this is pretty, we're getting a lot of consolidation. This is the control point. Um, you're seeing something like this. I would say, you're getting a wiggle here. You're gonna get stuff like this. You're gonna get sell off and then kind of go up and then sell off and then sell off and then kind of go up. And you're gonna get something like this. And then you'll start getting like the parabolic shit after you see like this breakout, because that's where the previous parabolic stuff was happening. Um, when you go back here, we traded in this whatever what 13 to 24 range for a very, very long time. That's pretty much from February through October, November-ish. You see a lot, the last breakout, last retest of this is pretty much a year. And then you see a parabolic move that happens in what? How long is this parabolic? December through March. 3 months. You trade for a year at this base and gaining traction level, and then a parabolic move happens in like 3 or 4 months, right? And now we're getting back to this. This is the parabola. Now we're getting back to this like base. We're gonna trade in this long. This is gonna be June through June-ish. We get a retest, and then we start seeing movement upwards. It's just my thought process of where or what
Yeah,
I would look for.
that's fascinating. And could we look at Solana and then kind of like walk through
Yeah, sure.
some of the events related to that because that would be interesting comparison.
Yeah. These actually might be a little funky. Let's see which. Try this one.
And I think that one of those initial parabolic moves was actually from just like a
Announcement.
Twitter spat between some toxic Bitcoin maxis and like the Stacks community that we got the better end of.
Nice. All right. So Solana. This looks like shit. Okay, so you know, my first exposure to Solana was 31 cents. The average price that people paid is 35 cents, so 100x of what most people like. A lot of these, I'm looking at the volume on this fucking shit at the beginning. Pretty nuts. So if I'm going through here, gets hit a bunch. This was like a previous. This was resistance here. This is resistance here. This one was a top and a resistance. This was turned into a support and a top here, and then this is the actual top. So really spread out. Looks to me, this type of shit looks crazy manipulated. So we see here we got $1.29. It broke out in December. Massive move up. None of this looks real. There's not a lot of like consolidation type stuff, which I think is I didn't trade a lot of Solana for this kind of reason. I think it looks really shitty to me, but let's look at it here. So this is the average price traded 36, currently 18. We hit 11, or we hit like 8. What was it, $8? I think was the low. It's not showing it on. What was this? So this is. Wait, this is FTX. So let's definitely not use FTX. So also on these, when you're using TradingView, like you're gonna get different things. So let's see Solana.
Coinbase.
Whoops. Yeah, like Coinbase is going to be like a better one. Yeah, so that wasn't even real price action. All right, let's see. So this is a little bit better. They didn't start trading it until the $20 range, which is fucking crazy. So again, you don't have a lot of I don't know. This is not a great chart again because you don't get a lot of previous. Let me try something else. Let's try Binance. I think Binance had it earlier. Whoops. They don't have. Did they not? Did they not trade it on Binance? There's no way. All right, let's see KuCoin. KuCoin might be pretty good. They didn't start trading it until way later either. This is also kind of one of the issues here is you don't get a lot of data on things. It's kind of like disjointed unless it's like a top, a better little bit of a tier project on terms of where you're finding your data from. It's all disjointed. You can see how look how much different this chart looks from a chart on look at my drawings comparatively to this one. And this was a low $8. Well, let's retest. Still really, to me, looks shitty, but here, let's talk about it. Let's see what the price control is on this one. Pretty much the same, $35, $36. A lot of volume in the $8 to $9 range. Here you see how much you got a lot of purchases when they made down to this because it wasn't a very long time that it was down here this low. But you can see how little volume there was above. This is all fake as shit. Like 250. Look how much volume there was at 250. Literally none. So you actually see some purchasing down in here. It could go back to that line pretty easily. Looks like probably if I was a betting man, I would say we were going to return to this price points again, 14 to 19. There's a lot of when you see there's like a thing called caverns, and I use these things. I'll kind of go into a little bit later on when I use my this is just like the very basic and how I set up my chart, and I can kind of keep going on different things that I use. But when I see the price traded below something this one's okay, but sometimes if you'll see, let me see. What was theirs? To me, see how there's a lot of volume kind of here, and then your price of traded is not that much off. Where it's compared to Solana, you see kind of the opposite, where the volume's up here, but there's a spot where there's literally not very much volume, not too far away from the current price. They call this a gap. You get a gap in volume at these price points. Sometimes they refer to them as CME gaps, which refers to the Mercantile Exchange, Chicago Mercantile Exchange. They'll have a Bitcoin CME gap that needs to be filled. I feel like asshole traders say that all the time. But pretty much what they're referring to is there's a gap in volume at a certain price point that was kind of skipped, and then people are going to go in and fill in those price points. If I was a trader looking to get entries into this position, I might be I would probably buy some at 20. I'll buy some at what's the next little 15, and I'll buy some at 12.
What would you
These are the
consider that? What would you be doing there?
say again.
When you're buying at those different levels, what are you calling that?
So
DCA, dollar cost averaging into
yeah,
your
like dollar
position?
cost averaging into in positions. Yeah. A little bit
So
overview on that one as I enter and exit positions in what I call the rules of three. So I'll show you on paper trading real quick. So if I was looking to buy, this is the low volume area. This was the kind of where the daily candle changed. Let's zoom in on this candle here and see what we got. So this was that gap of the low volume, which was that $14 range. I would put a buy here. So below the usually when anytime you're like looking at things, they'll generally like have like wicks. You can kind of set them up into like multiple positions. And this is kind of like my favorite trading style is like these. They have these. You can buy like how many units at this price. So I'm gonna buy 100 units at if it goes to the $12 range. Instead of like market buying stuff, you also get better prices if you doing limits. Um, so you can have it set up if someone drops in the I would say this is a breakout price. So I would do let's do buy here 100 units. And then, these are I wouldn't buy at the top of this range here. I think we're gonna I think it was 18 and these things will probably get hit again. Um so like I would have when it comes into this price, this is when it purchases it. That was the breakout price. Um you're gonna look at buying here, you're gonna look at buying here. You don't want so and then say like if it gets down to these prices again, $11. If it gets there, I might buy 1,000 because I think the 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 ability for it to kind of reject off this price is probably pretty high. So that's kind of how I do Ethereum purchases. So I don't think it shows you purchases on here, but let's see. So I was doing like I was just showing somebody here, but you can see like shorts and longs here and sells. But what I had done on this previously, like so this was like that June. I bought about 40 I think like 37 and some change Ethereum during this time. And it was, I'm coming through here. This was like it got hit a bunch of times. If we go back even farther, this was like that knife cat. I remember this one specifically. It was like who was it? This was the 3AC liquidation, right? So this was a huge knife catch day. I remember this one's like specifically, I didn't buy anything around here. This was you're if you're doing it here, this is knife catching. You're very small purchases. I saw people get in longs around here, and then kind of like ride this wave up. But I like to be a little bit more safe, and I like to do retests. So this was already drawn. This has been this POC, which is called the point of control line, has already been there. It rejects off there twice. So my purchases were started around here, which was at June 30th through the 12th, and let me zoom in on it. I had purchases set up like this. So we hit that point of resistance. This was the breakout. So I would put trade by ETH set 10. And then I had a buy ETH set 10. And then this was that breakout candle by ETH set 10. So I pretty much, just like this, had set up. Whoop, why is it doing that? There we go. Trade by. There we go. Like this. And you come in and this gets filled. This gets filled. Now we have 20. It didn't reach it this time. And then the following time, it hit that line and then it filled the 10. Right. So you're able to pick up even amidst bad or like just bad price action. It's a really bad day. You want to buy on days that you are seeing insane volume. Like the two best days to purchase in the past year have been this day, June 13th, and November. Buy on big red days. So this is the start. You want to start DCAing when you see a giant red candle there hasn't been a red candle this size since May of 2021. So you had a year and a couple months before it even reached this red candle size again. That's a good purchase price. You again see here, boom, big ass candle, big ass red candle. These purchase points you're buying in the $1,000 range. You know, again, maybe you didn't catch this one, but you still left those open. This you missed all this action. You missed all this action. Guess what? Now you bought it. You bought 10 here. You bought 10 here because it's wicked down in here. So you bought 20. Now you're reselling it for 60% up, right? So there's a lot of things about being patient and just kind of observing the market. If you miss it, you don't chase it, and if you catch it, you want to set price points of which you're going to sell, right? So, I have that 37 ETH. I sold 10 around that $1,400 range that I had previously here, and I still have like 27 for trading through here. And I still have like this is all separate of your like spot money. Like this is all referring to like a trade account. If you have, so like say you have your net worth is 10 ETH or something like that, I wouldn't trade more than probably, 10 ETH is not a ton to be trading with. So like I would probably be trading with, when you're starting out with this stuff, point 0.2, maybe like point 0.3 max. And these are the prices that you get. It's all about not having any emotion when you're trading. Like if you are trading, you start getting like sweaty palms and you can't, you're not thinking clearly. That is way too much amount of money for you to be trading. And you wanna be very dialed in, very, whatever this. If I lose this money, it's not that big of a deal. And if you're writing and you're taking pictures and screenshots of, oh shit, I'm up like 800% or whatever, like you should have sold like 600% ago, at least a third of it, right? So, um, recently with the whole checks thing, the NFTs, the checks, those were absolutely ripping. Those went from like $8 to whatever they're at, like point 0.6 ETH. I personally, I got like 40 of them. I was out of 35 of them before point 0.2, and I had like 5 left to kind of run. Everyone's like, "Oh, but you missed out a bunch," but not really. Like I took profits. I'm very happy with my sales. Um, I still had 5 left, and I sold those around like point 0.5. If I didn't do that, let's look at those from a year from now. The likelihood of those still just absolutely murdering it and being super high, probably pretty low, I would assume. And if not, then I missed out. But again, I took profits. I sealed those profits in. It's definitely a psychological thing. If you want to be a consistent trader, and want to do it more on the side of making profit that you can live off of, you always have to have like cash flow and coming in, right? So that's why I do this mostly is more of like this type of trading where you're buying at lower positions, you're holding for maybe a month or two on the trade account, and then I rotate them back into like spot positions or whatever I'm feeling at the time, or cash, depending on what's going on. So um, there is, let's see, clear these off here. Got any questions? I've been rambling for a super long time.
Yeah, we can open it up if anybody has any more questions. I think that was a pretty informative first session and touched on kind of a lot of topics here today.
Yeah, sure. Anyone got any questions for me?
Trevor, Ken, Bonbon.
Are we recording this? Because this is gold.
Yeah, I'm
Yeah, it's
recording
recorded.
this.
We could
We're gonna create
restream.
like
We
a
could restream
catalog.
this on. That's dope. We could restream this on YouTube's too, like co-live or something.
Yeah, for sure. Yeah, these are. I'll kind of show you, if no one's got any questions, I can show you my next little thing, what I use. So this is just like the basic trading. Like this is kind of what you start out with. Go back, if this is your homework, like now you have homework to do. Go back, look at your charts that you most trade. Again, also you don't trade more than like 7 things ever. Like you can't focus on more than I would say even if maybe 3 things to start off with. You want to be like intimate with the price action. You want to know what's going on. Let's say for instance the NFTs, the biggest and most successful NFT traders, someone like Franklin or something like that, they're insanely intimate and know every detail about every ape out of the 10,000. They know everything about every single one of them. They know without even looking what the current like floor of that trade is. I guarantee you that he knows all of this stuff extremely well, right? So you can see how someone who becomes extremely knowledgeable about the topic of what they are trading, like if you ask me any question about Ethereum, I will probably know the answer. I trade this one, I trade Bitcoin, and then like my NFT bags. But most of the time it's just these two, and then like alts I do like sushi or Uniswap stuff like that. But realistically, on this type of trading, I only trade Bitcoin and ETH, just because those are the ones I'm most intimate with. Those are the ones I know the most stuff about. Those are the ones I can have time to react and show things, what I know about. So that's another good little tidbit is, make sure that you're not trading more than a few things at a time. But for homework, go back, look at your charts that you are most intimate with, start doing this type of drawing your horizontals at what you think is a previous resistance, previous supports, and kind of see what that relates to the current price action, right? So the first two boxes here cover pretty much all price action since like June of 2020 practically, like except for this little bit here. So if my thought process is, if hey, we're near these lines that people that we're not breaking out of, we don't have crazy amount of volume again, we're probably going to go back down to this line, 1400.
Fill that cavern.
That's my it's like look at right here. Look at this cavern right here. Like we got no volume traded between, and we talked about this a couple weeks ago on the what you call it's on the Not Financial Advice. I was talking about we were in the what was that around here probably. One of these days, I stopped being bearish, and I was like, yeah, we got some consolidation, we got stuff going on here. This is the price of control. We get some, a little bit less lenient on FOMC. We're getting movement up here, but we're not like, oh, we're not going back up here. Like we're going at max. The 1700. This would be fucking insane to me if we get up here. But at this current time frame, but yeah, like if you start seeing, this was great shorts. Like you could have hit 1691. This was a line that we drew from June of 2021. If it got really close to here, that's a short. That's a great short. 1691 through whatever 1500. And again, don't get greedy on these things too. Like if I had let's look at this current time frame. Also we can talk about candles and stuff like that. Does anyone know about candles and how they function?
We can maybe save that for like the
Another
next
time.
session or something. Yeah.
Cool.
We don't
I
have
was
to
gonna
hit
go with
everything in this first session.
yeah. When I have all my stuff on, I'll show you what I use. So this is the charts. This is one of the things I created, and this is the other one here. So RSI, we can talk about this next time. Talk about RSI, what that actually means.
Relative
And
strength index is what it stands for.
yeah. Just like how so I use it a lot different than a lot of people use it in terms of so I kind of just showcase it here. I use 3 RSI lines, and I look for the cavern that forms between them. So these price points are pretty much average price points. These are everyone's kind of paying the same. As you get closer to them, as they're getting closer together, this is kind of like a spring, right? So this is again, this is a daily chart, so you see a lot of movement here. But what I'm seeing right now is, kind of explain this here. So this is kind of why I said the June, the May top in 2021 is why I considered this the actual top. is we see this. We see a March 2020, all of this very low 50. When something is RSI 50, that means it's pretty much, that's the not overbought, it's not oversold. So RSI is only referring to things when they become, too many people have been purchasing him, and then it's kind of going to collapse, or people have been selling too much on the opposite side, and we see, the opposite effect where people are oversold too much, and now people are going to buy, and you can see a reversal. So,
Yeah,
uh.
I would say the relative strength of, the buys and sells.
Yeah. So like if you look at this line here, this is one of the ones that I had drawn. This was the bottom in 18, hit like $80. We've revisited that one time, but we kind of see a similar structure kind of show up here. Is this is the low point. We start to see, if you're looking at these things, the cavern that forms between these things is very high. So just how this cavern kind of shows, like this is a lot of empty space in between these two spots. This is a lot of empty space in between these things. And that's another reason, I don't use just one indicator to say like why I purchased. This is two confirmations. So the price of control was here. It rejected off here. We're also seeing really oversold purchases on a shorter time frame. These things are probably going to, go up. And if you wait a month, then you're able to sell for practically double. And that's the nice thing about crypto is you see an insane amount of volatility through all these things. But just, you want to have like a good, when you're starting out, if you don't know what these things mean or how they look or how they're supposed to look, because you haven't spent a lot of time and due diligence with doing this, then you want to have like three confirmations, right? Like this was a confirmation with the POC. This was a confirmation because we got a little big cavern, and this was the third confirmation is, how this one works is called Keltner channels. This one is referring to, almost like a bell curve. Is that how I explain it? So 68% of all trades should happen between these two orange lines. And if you go back, I have two different style ones. Let's see if this one's a little better. It works. I don't really use that one on the daily. I use this one. Also, these are all different on each time frame. We can kind of go into time frames next week. But all price action is happening in between these orange lines. So you see how pretty much
That
anytime you're
middle
going out
zone.
like this. So how bell curve works is 68% of all trades happen between one standard deviation. So this orange through here on the underside of the orange, all this should be happening within a given time frame. Let me see which one works best on. And I really like this one for shorter time frames because you see when stuff is really easy to short on like a really really high time frame, like a 32-minute is my anchor window for trading short term, and then I go down to the 2 minutes for actually like executing like exits
Gotcha.
on
Yeah.
short term. But pretty much all action should be happening between these lines. Works best on the 4, looks like. Anytime that you're breaking out into these, like if you are buying here, this is what so it's 68 and then 12, and then like the wings, the final two wings are roughly like 1%. So if you're touching this white line here, 1% of all price action in a 4-hour window is hitting this. Most time it trades around the white. If you go back, it's the most touched spot is usually the white. So what's going on here is now that we're seeing price actions move out of that 68%, they should start retracing. So we hit this, and now we retraced all the way back to here. This is how I use my positionings of first sell is here, second sell is here, third sell is here on a short position, something like that. So we can kind of go into that next week. But homework wise, learn how to, or just practice doing a resistance and support drawing at the basic level, and then we can go into these next things. Look what point of control is. It kind of flips the idea of volume on its side, changes it up a little bit around the y-axis instead of the x-axis, which is what I like a lot. Um, anytime that you are using, everyone's like, oh, use Fibonacci's or use this or use this. That's what everyone is using. Like that's what everyone tells you to use. You're not going to get an advantage on somebody. I don't, people at hedge funds aren't using 618 Fibonacci retracements as their method of trading. You have to have something that gives you a competitive advantage, and you have to look at things differently to kind of uh, you know take extract that value from the zero sum game of trading. So if you're using like the standard Fibonacci that comes with this to base all of your your trading on, probably not going to go really well. Like if you look at the actual, look at the ideas board, or like the thoughts of that people stream, you're generally going to be seeing. Like I post a shit ton of stuff. You see a lot of people posting the same Fibonacci curves over and over. Um, but these are also really good stuff to like kind of look into. You can on here it kind of gives you ideas of what people are thinking, so you can kind of you got to find your style of what you like. That's what I say is always is important is what kind of trader are you? There's a lot of different types of traders, so it's all a push and pull type system. You got to find out what actually works best with you, what makes you the least amount of nervous or least amount of emotion, and what you're most comfortable with. So those are my kind of that's my
Yeah,
spiel.
I've learned a lot too, even myself. A lot of these different topics that you touched on, filling the caverns, looking at the volume compared to, where the price is and where like most of the price action has been throughout
Yeah,
history. That's, really good because, history tends to repeat itself.
yeah, for sure. And if it doesn't, you're gonna get uh you're gonna get something. You're gonna get some. You're gonna glean
Volatility.
some information off of it, right? You're not gonna. It's not gonna just be. It's not gonna repeat every time. Like I see a bunch of people using fractals now. Like this was the top year. It's happening right again, and this is why is it different than this time? It's like it's not gonna be the exact same thing, but you can kind of glean from the information that you're gathering. You know, what these things mean and like how the likelihood of them kind of happening again, maybe not exactly, but within the same kind of time frame, I would say is gonna probably happen. Like we get
And
it's a lot of ebb and flow, and it's something that you can kind of get a little bit of a competitive advantage on versus somebody who's just like, I'm gonna buy some now, I'm gonna buy some now. Unless you're doing like on a very long time frame, like, and you can skip all of this if you just do DCA purchases of like $100 a week and don't have to
yeah,
deal with any of this shit.
yeah. And you would say that like I don't know, you like Ethereum and Bitcoin more so because they have like a better, stronger history of trades just throughout time in general.
Yeah, my the my biggest thought process is especially in downtrends. Historically, we've seen huge retracements. The first thing that kind of always returns and has the most or like the soonest price action and returning to like a bullish sentiment, Bitcoin goes first. We're actually kind of seeing it right now. Right. So you see like F and Bitcoin ratios. These are something that I follow quite a lot. And you see that this is stuff I've drawn previously, but um, we're in a range. We kind of see this trend line kind of happening. Resistance here, if this breaks, like I would expect this to hit the 0.04. And that would kind of show that maybe that we are getting some bullish sentiment back. Bitcoin is performing better than Ethereum, and that's usually a general sign that that's kind of like the first mover. There's a lot of things that people kind of see. Also, I've been seeing like Matic has been kind of like a mover one, or you can kind of if Matic kind of moves and everything else kind of moves again. Like Matic was the first mover in this break here. I think it was one of the first movers in this break, the most really recently too. So there's a lot of indicators of lead indicators, lag indicators. You can get those are also terms we can talk about going forward. But if anyone has any questions on this type of stuff, anything
Yeah,
else,
we'll end with a round of questions if anybody's got anything.
I have a question.
sure.
Um, how do you know what indicators are ultimately gonna be like the most practical ones?
Yeah. So again, it's really up to like what you use and what you can glean the most amount of information personally. Um, I would say those are going to be your best ones, right? So there's just kind of like how I did it. There's a lot of people who just use something like this. I mean, like Trader SZ pretty much only uses like this type of stuff. He doesn't use any indicators. He just does previous historical supports and resistances and kind of does a lot of like that type of trading. So some people are insanely, they're able to glean a lot of information quickly from a lot of different charts and a lot of different things at one time. But I would say if you are starting out, RSI is always a good one. Something like the Keltner channels. They have basic Keltner channels and indicators. Um, and I would say what's more important over which indicator is better is actually just like putting and immersing yourself in these things. I did paper trading for I think like a full 6 months, like daily, just because that's what the guy told me to do. And I didn't do it. I didn't have like really any indicators. It was just more of like what I saw the price action doing that day versus the previous day, kind of getting intimate with it. And then as we got past the paper trading, then we started doing stuff like we like I said, we made these indicators. Um, they were able to kind of if you look at a picture and you can instantly see what's happening. I don't even think I'm that good at it. When I actually talked to the other guy, his name's Harvey, who taught me all this stuff. I mean, he was like, "What do you see here?" And I'm like, yeah, it looks like support around here." He's like, "Nah, all that's wrong. Here's this, this is what I see." And then you're like, "Oh shit, wow, I didn't even notice that." And so it just comes with a lot of time, a lot of practice. But again, like mainly just starting. That's why I started with these is figure out how to draw these really quickly. You should be able to open up a chart, fire up a chart, and then start placing your resistance points and your top points, pretty quickly. This pops out, this pops out, this pops out, this pops out, this pops out.
I
So
would
you should be able to
also,
do that. Yeah,
sorry, I would just also
good.
add like the time frame of which you're looking at too is also going to be, very relevant to the type of trader that you are. Like I
Yeah,
think what we've been
100%.
covering today is like daily, more like long
A daily
term.
chart, longer term, minimum of like a 3 month, like maybe like a 2 to 6 month trade.
Yeah, like a
Um,
swing trade or something like
yeah,
that.
much more on that side. Yeah. If you gotta like work your way into that. And again, it's if you don't respond well to that, it's too slow for you, then that's not the type of trader you are. You could be, a short term trader versus, there's like long term, short term, swing trade and like, day trader pretty much. Day
I think we
traders,
can
like I
get
said, when
into
I've
that, next week
yeah,
too. We'll dive
yeah,
into like
100%.
time frames and candles.
Yeah,
I'm writing these down for next week, so.
perfect. Yep. Does that answer your question or anything else follow up on that one, Bon?
No, definitely that was a good answer. Just so I guess another question is, let's say you have like a hypothesis on how a price movement is going to play out,
Yeah.
but let's say that it doesn't.
Hmm.
Like, what's the best way to kind of get feedback on why it didn't work out the way it did if someone's not mentoring you, let's say?
Yeah, for sure. So again, like when I would say this, just to kind of preface that, is when you enter a position, um, you entering with confidence. Like if you're entering a position, you're like, "Oh, I don't know, man. Like this might not go well." That was probably not a trade you should have taken. First of all, second of all, the going back and studying the past ones of like let's when you're paper trading, you're like, oh, I'm gonna buy here and or no, I'm buying. This was kind of like a bullish. People I see people draw these all the time. I'll draw here like oh, this was like a bullish wedge that kind of formed. We're gonna break out of this area or whatever, and then the opposite happens, and you go back and you kind of leave. I reset my drawings, but I leave all this stuff up on my normal charts, for things. So like this was a failure for me. Like I thought this was gonna go up here. This one had a similar appearance, and then was able to break out. And this one did that, not do that. So it's just again like a lot of trial and error type positioning. And again, like talking with people, you might not have a mentor, but again, finding other people that trade, you can, even just posting on Twitter, like, what do you guys think about this trade? What do you think about this? You might get some feedback, but again, I feel like I get a ton of feedback on just like from charts and like my current, not from like big traders because it's just nonsense
It's
at
a
that level,
different
I would say.
style. Yeah.
Well, it's different style, but it's just like you know what their motives are. Like if you're reaching like 500,000 people, like me personally, like Trader SZ, I think he's a fantastic trader. But like again, he's posting like bears are dead, and and then as soon as he tweets that, like the price falls. Like it's such a like people like look up to his ability. But again, like he could be, not to say he's like a bad guy or anything like that. I just think anyone at that level is gonna be. I like to look for like small traders. Like if you search like the ETH, the money sign ETH or whatever, and do by latest, look for like people that are like sending up charts, and they don't have a lot of followers. They're just trying to get like feedback from people, what you think this position is. And again, like I said on TradingView, this little stream idea stream, look for other people that are having a similar charting style as you. They use the same indicators as you, and see if their stuff lines up with you, or you can just bounce back ideas. That's how I started. Like this Top G guy, I like him, but
Top G.
he posts he posts shit like all the time, and he always like, he's always using the profile. That's why I like kind of caught on to him. He does very simple stuff, but um it's something like we have similar styles, and I post on his stuff what feedback. I like this style, like what you're doing. See how they kind of play back out previously, but you can kind of you want to find people to chat with and talk about it, and I think that's like the one of the best benefits. And again, it's not like super hard if you're looking for it, I think. And even you just ask me stuff too.
Appreciate that. Yeah, that's really helpful information.
Yeah,
Yeah,
keep
man.
coming back. We'll do some more of these sessions. We'll figure out if this is a good time that works for us, or what moving forward. But yeah, we've got plans to keep providing some of these educational, I guess, tutor sessions, or whatever you want to consider them.
Yeah, for sure. And if you like what I do, I have like a Substack. I get That's kind of like my main use for my Substack. I kind of put my ideas on there. I do a lot of more podcasting stuff now. That is more just kind of like basic educational stuff, but my Substack is more like my thoughts of trade, stuff like that. And I also have my indicators that I created on there. It's like if you subscribe, it's like $10. You get access to the indicators that you can share on TradingView. It's kind of how one of the nice things about TradingView is you can like these are all the ones I've created except for this one. And then I'll edit them and stuff like that, but you get access to all these if you're interested in them. But again, I would say if you're first starting out, it's something that you want to find out. Very basic. Draw your lines, basic support, basic, good books. Elliott Wave principles are really good. Just like basic understanding of market sentiment and like the stuff behind it. I would say that's a good starting point, and just kind of just getting your hands dirty and doing a lot of testing. Again, this trading the paper trade thing is completely free. free account, everything. You just fire it up. Um, I think it's one of the most helpful things, if not the most helpful thing, is just putting trades in and see what happens. And again, you want to treat it like real money. Also, it's if this is $100,000, trade with $1,000. See how it goes with you. If you're like, oh, put $100,000 on this trade, it's not realistic. It's not something that you would actually do, and it's not something that would be beneficial in the long run because you don't get the same feeling.
Yeah, you're not gonna
Even
learn off of it if
yeah,
you're
exactly.
doing
It's just
some
like
bogus trades. You want to be
yeah,
pretty realistic in how you're going to operate yourself.
yeah, and I mean, yeah, trading is 100%. It's not the indicators, it's not the volatility, it's not the price action. It's just you. Are you able to handle the stress? Uh, day trading like is extremely stressful. I would not recommend it to people. Like I'm like again, that depends on your personality. But like for me personally, it was more of like I'm a swing trade guy. Day trading is a nightmare to me. It's like way too stressful, even with small amounts of money. I just don't like. You always have to be always on the charts. Whereas something like a more something like a swing trade or long term trader is my approach, where I'm able to just research things and find out stuff about the protocol that I'm trading. Be very intimate with the news cycle of them, and then also be learning about the trade analysis and price action of all those things.
All right, guys. Any last final questions? Gonna wrap it up here for the first session. It's been pretty good, amazing. Thank you for all the knowledge, Career.
Yeah, no problem, man.
Nothing. All right, guys. We'll keep you updated. We'll post reminders and stuff about when our next session will be. And thank you guys all for coming. It's been great. Learned stuff. Tell your friends, tell your people. We'll see you next time.
Later.
Thanks for setting this up.
No problem at all, guys. You take care.
I'll go.
And we're always around in Discord too.